Well, hello, everyone. Cynthia Tomane here with Interactive Brokers, and thank you for joining us today as we take a look at using pivots for a better perspective. Now, I'm very pleased to have Tim Morch with us, but before we get into Tim's presentation, I'd like to introduce Pete Mulmat. Pete is the Director of Education for the CME Group, and it's their involvement here that has brought you today's presentation. So, Pete, I see I'm going to go ahead and put this on your slides for our brief intro, and let me go ahead and pass you the ball. Thanks, Pete.
Thank you so much, Thank you, Cynthia, and thank you to everyone around the globe for joining us today. CME Group is so pleased to be co-sponsoring this event with IB and extend a welcome to you for today's presentation, Pivoting for Better Perspective with Tim Morch. CME Group and IB have been working together to bring you professional educational webinars on futures for many years, and we encourage you to look in IB's webinar archives for past events from 2013 and 2014, as well as register to attend further monthly events. Again, just a minute to take a look at our disclaimer. I'm sure you guys have seen more than your fair share of these. Remember that futures are a leveraged product and there is a risk of loss. So I'll give you just a second to take a look at these. As a trader and investor, you look for opportunity in the markets and ways to capture that opportunity. Futures are an extremely flexible tool for expressing your market opinion and capturing trading opportunity. The CME Group futures and futures options markets trade electronically almost 24 hours a day, providing traders an opportunity to trade market volatility any time of the day from anywhere in the world. CME Group represents a family of individual exchanges, including the Chicago Board of Trade, Chicago Mercantile Exchange, NYMEX, and COMEX, with contracts covering all major asset classes, including foreign exchange, stock indexes, agricultural commodities, energies, metals, and interest rates. CME Group is regulated by the U.S. CFTC, the Commodity Futures Trading Commission. The Interactive Brokers CME Group Futures Resource Center can be found at www.interactivebrokers.com/CME. This is a great place to start your day with current news, quotes, and charts, all on futures. Please take a look if you get a chance. I'm very excited, and I hope you guys will register for our next in a series of School of Futures. We are going to be talking on August 24th about an introduction to currency futures. And we will be covering one of the, Tim's focus today will be on British pounds, and one of our currency products is the British pound futures. We offer trading in British pound futures, both a full size and a micro contract, and it trades basically Sunday to Friday, 23.5 hours a day. Tim Morch has been a professional trader, author, educator, and mentor for more than 35 years. Besides trading his own capital, Tim is president of Blackthorn Capital, a private money management firm that works with several of the largest non-U.S. institutional portfolios. In the 80s and 90s, he managed and taught other traders from institutions like Commodities Corp, J.P. Morgan, and Goldman Sachs. He remains one of the world's largest currency traders, routinely carrying positions of several billion U.S. dollars. Tim has taught hundreds of professional floor traders at the Chicago Board of Trade and CME to become successful off-floor electronic traders. He is a regular lecturer at some of the most prestigious graduate schools of business and finance in the United States, including MIT, Stanford, and the University of Chicago. He currently donates his time teaching basic technical analysis to 4th and 5th grade accelerated students at 59 elementary schools around the United States. The program is named Crayon Drawing. He is a regular featured speaker at the popular Traders Expos held around the world, writes a weekly column for MSN and MoneyShow.com, and gives educational webcasts for most of the exchanges around the world. He is the author of several highly regarded books, Trading with Median Lines and Mapping the Markets, featuring his own trading methods. His website, www.marketgeometry.com, features a great deal of free information regarding his trading methodology and are visited by thousands of traders from around the world on a regular basis. As always, thanks for making time in your schedule for us, Tim. Over to you.
Thanks, Pete. Thanks, Cynthia. Let me see. There we go. Got me to page one. And let me get the pointer out so I don't get into trouble. There we go. How's everybody doing? I can't see your answers because Cynthia has blocked them so that I will pay attention to what I'm doing. We're going to talk today about clear pivots. And first, let's just go through the disclosures, and then I'll give you a better feel for why we would talk about this. This is my company, Market Geometry. It's the educational arm. I'm also a sovereign wealth manager and work with the top 5 sovereign wealth funds in the world. Trade their money, work with them. I trade their money. This is, anytime we talk about anything financial, we have to have a disclaimer. You can read through it. The honest truth is, the big deal for me is this. This is one person's experience. Your experience may differ depending on how much you practice, how much you know about the markets, that particular day, how you feel. There is no holy grail. If I had it, I'd give it to you, but it doesn't exist. Hard work, education, those are the best things. Under leverage, under trade. Those are the best pieces of advice I can give you. This seminar is actually dedicated to all of you. You take time out of your busy schedule to come here and try and improve your skills, and I'm honored that you take time to do that. So this is the presentation style that I use when I lecture at MIT and Stanford. Please be patient while the material unfolds. At the university, this might be a 3 or 4 hour lecture. We're not going to take that long. Please keep your comments related to this material in this seminar. Most of you are here to learn my methods. And please hold your questions until the presentation is over because, well, Cynthia at this point I think has blocked you, but more importantly, just pay attention and let the presentation unfold. It has several purposes, and the only way to tell it is just let it go through. So we are going to talk about several things. And, of course, I believe in the old Greeks, the old dead Greeks. I think they were the best mathematicians in the world. I'm also a Newtonian physicist. I have a PhD in physics as well as several other things. But it all started with the Greeks. Let no one ignorant of geometry enter here, kind of our mantra. For without understanding motion, we could not understand nature. Extremely important. We need to understand that things fluctuate. Here's one I don't think I've showed before. Who has courage to say no again and again to desires, to despise the objects of ambition, who is whole in himself, smooth and rounded? And what this means is you don't desire, you're not greedy, you're not fearful, you don't want to own the world. You want to take your time, find repeatable trades that you know work well for you, execute once you find the opportunities. When it's time for you to get out, get out. You want to feel whole in yourself, smooth and rounded. In other words, you've mastered yourself, and at the end you'll see, my quote is, master your tools, master yourself. This is very important. So, price fluctuates. And we're going to be talking about that today. Can we be wrong when we pick a pivot, when we pick a direction? Of course we can. Can we be right? We wouldn't trade, we wouldn't try to trade if we didn't think we could be right. And over time, if we weren't right enough, and more than enough to pay for the losers, of course, we would cease to trade. So I need you to draw and think with precision. And think really is even more important than drawing. But to draw and think with precision. And of course, I don't know, my grandmother used to say this. I've heard, Rastafarian songs that say this, measure twice, cut once. Extremely good advice. Think about it more than once before you execute. If you miss the opportunity while you're thinking, it's just a missed opportunity. Believe in your work. When it's time for you to execute, execute. Don't hesitate. Don't chase price. Plan your work out. When it's time to execute the plan, just execute it automatically. You must see clearly before risking your capital. You must have a clear understanding before you can think tactically. Now, right now at Market Geometry, we're planning 3 seminars with Battle Commander Joseph Powell that are going to happen in the fall going into the winter to teach us or to help us to learn how to think tactically. He's been a part of and worked with and still continues to work with every single Black Ops section of the government. And his specialty is how to think tactically and how to execute once you've come up with a tactical plan. That we're going to apply that to trading. And so that's kind of a special theme that's been going through Market Geometry. We'll bring in a little bit of that today. Excuse me. If you're having problems identifying swings or find yourself on the wrong side of moves, I think you'll benefit using daily charts, weekly charts, and monthly charts when you practice or replay. There are a great deal less pivots, and the major pivots jump out at you. That gives you 2 opportunities. One, it's easy to see this is the pivot, or right afterwards, okay, I missed the pivot, but this is it. But 2, as the pivot begins to develop, or as the pivot first develops, you can think tactically, okay, if this is a high, then I expect this, and I want to see this, and then I'll do X. And you can watch and see if you're right, and watch and see if the tactical and strategic ideas that you put together actually follow and work. And practice is extremely important. I don't think most of you realize this is my 43rd year of trading, almost all of it as a professional. I still do replays at least an hour a night, 3 nights a week. Still. My partner probably does 3 or 4 times as much work, replays, working on charts. So practicing and practicing correctly is extremely important for all of you, and will be for your entire career. The day you stop learning is the day you'll no longer be successful. Please do not misunderstand. This is very important. I'm not telling you to look back to higher time frames when actually planning trades to quote-unquote clarify the trend. This practice will only cause indecision and confusion. I'm speaking about using dailies, weeklies, and monthlies when you practice or replay charts. I don't believe in multiple time frame charting. The gentleman that wrote the book and introduced it and charges $10,000 for half of a day at his house in the Caribbean is paying for his house in the Caribbean. All he's done is introduce a bunch of confusion to people because the trend on a 5-minute chart is not the trend all the time on the 20-minute, is not the trend all the time on the daily. So we're talking about practicing on larger time frames, not looking back when you're trading. And do not confuse the two. So we're going to take a look at a weekly, actually I believe it's a monthly, I misspoke here, a monthly chart of the British pound against the US dollar. And we're going to do it for 2 reasons. One, we want to see if we can identify and use some tools to help us identify major pivots. If you can identify them on a regular basis in the monthlies, the weeklies, and the dailies, it's the same process if you trade the 11-tick NASDAQ futures. You trade the 888-tick gold futures, the 5-minute E-mini S&P futures. But those are much more complicated and harder to see. There's much more noise in the euros, in the euro dollars, for example, and I mean euro currency, in the 20 minutes than there are in the monthly pound. So For example, if you want to learn to box, you don't go box Mike Tyson or Muhammad Ali. Well, maybe you do at this point because they're getting older and slower, but you start with somebody much slower with very little ability compared to you. The pound moves very slow on a monthly basis. It'll be much easier to think each bar, and you have a whole month to think on each bar. So let's take a look at the monthly, I know it says weekly, chart of the British pound against the U.S. dollar. Now this actually is when I started to pay attention to the currencies. At this point, you'll see this next chart, it was still illegal for individuals inside the United States to trade foreign currencies. Gold was fixed. Foreign currencies were fixed at 1030 by the Fed, and they basically didn't move. So you could take a look here, and this is 1971. The pound's flat, and this is right after Nixon closed the gold window. We used to have an open gold window, $35 an ounce at one point. Other countries could borrow from us. At this point, we own 47% of the world's supply of gold. 47% of all the gold taken out of the ground was in various places, including Fort Knox, but all in the United States. Nixon closed the gold window. He was worried about unemployment. He decided he was going to become a monetarist. I was studying at this point under Milton Friedman, who was, of course, the father of monetarism and probably the most well-known economist, certainly equaling Keynes. And he believed in money supply, money supply, money supply, money supply, and its effects on the economy. And since gold was tied to the money supply, tied to currencies, tied to bond rates, by closing the gold window, it meant that our currency rate with other nations would be decoupled. And so even though I couldn't trade currencies yet, Milton Friedman came up with an idea that I was part of the team at the University of Chicago. We put together and presented to the Chicago Mercantile Exchange. It became the International Monetary Market. And in 1978, it opened, and you could trade currency futures for the first time in the United States. And prior to that, only banks traded amongst themselves. Corporations could hedge after 1971, basically. So Nixon closed the gold window, and you can see after the gold window closed, we had a nice move up in the pound, and we left a major high. Now, at this point, we don't know if this is a major high, as we're over here. But watch what happens. Price comes and breaks the fixed low prior to Nixon closing the gold window. And I'm going to go back and quote one of my earliest trading mentors, Amos Hofstadter. You never want to pick a top. You always want to look for the shoulder. And if you're trying to sell, you don't want to sell the top. You want to sell a weak reaction. So we come up and we make a top. We take out the low. We pull back. And if we're trying to get short, we're looking for a weak reaction. Now, maybe this isn't the reaction you want to sell. Maybe you're not sure yet. So what do? I do something called a maximum excursion line. You'll see it in the next slide. I connect the high and the first pullback, and I'm going to extend it forward. It's going to give me the maximum excursion line. And you can see it's the same chart. By connecting this high and this high, connecting it forward, I'm connecting the extreme with the first pullback. I create the line of maximum excursion. And this should be a trend barrier. It sometimes, when it's broken, it becomes a center line. But it gives us a good feel. If you're looking, for example, for lower highs, you should expect that these highs should fall lower than this level. And it's a good marker. So if this high isn't the high that you sold, Now remember, there's years in between here, but we don't care. This could be the 5-minute pound. It could be 5-minute euro. It could be 5-minute gold. Practice on these charts, because look how clean the moves are. We come down, we leave a low. I don't think this is the most major low on the chart, but it's an easily identifiable low. We pull back. We don't take out the high. We leave a lower high, so this would be our reaction. We come down once again and take out the low. Make a spike low. Look at the close. It's called separation. When we make this low and close all the way up here, great separation. Then we come up and leave a shelf, and we're going to mark that out. Now, these lines we call advanced multi-pivot lines, which means as soon as we close off the high and don't follow through, we put this line out there, and they're often revisited. Same thing here. Close on our high, don't follow through. In fact, we close on our low here. Put this line out there. Look at this one. Close on our high, open, double tops, close on our low. Put this one out there. Look how price revisits it. A lot of people will be able to connect this later on, but you'll have this 1, 2, 3, 4, 5, 6, 7, 8, 9 months in advance of anybody else, which means when price gets back up here, if you were looking for an area to sell, perhaps, you had a 9-month advantage in the monthly pound, which is 9 bars. It's a very, very good edge. Okay, so there's something that I like to use as a marker. I didn't develop it, and anybody recently that claims they developed it is not telling the truth. In the 1930s, there were some gentlemen in the Midwest that used to sit down at breakfast and just exchange charts. They have a really nice book out. They've all passed away, and Market Geometry is actually going to reproduce this book and I think give the proceeds to charity. There's 5 or 6 really interesting things, but it's basically just a collection of these charts. They'd sit down, they'd have, you know, sausage and gravy over their biscuits, pull out their hand charts that they got, you know, they get their information from the newspaper, and they're trying to decide when they want to take their pigs to market, when they want to hedge their corn, when they want to hedge their beans or wheat. They're just trying to run their farm as well as possible. And for them, it was generally, you know, other than selling their hogs actually, but, you know, when they might actually have to get together to sell one full contract. These were not big players, but very, very good information. And one of them kept it all together, and then eventually a small company decided to just publish it. It was very inexpensive, and it's out there. I haven't seen it for sale in the longest time, so we're going to go ahead and publish it. So, and what they used to look at was 3 drives to the top, and especially when they're lower drives. So we've got 1, which was the high, 2, which was a lower high, Amos's shoulder, and 3, it's a shelf, doesn't have to be a shelf. And generally, they'd also mark the lows as well, 1, 2, 3 drives to the bottom. Now, one of these is going to give, whichever one it gives, is going to show us the clean direction. Doesn't mean you can't enter before that, but they're just road markers, nothing more than that. And you shouldn't overuse it. There's no complicated rules. They should be easy to see drives. It's something that you can use when you're looking for pivots. So let's see what happens. Major high, pullback, which is lower than the first shelf. Second high, lower than the extreme. This is the shoulder that Amos is talking about. Takes out the shelf, new low, pulls back, leaves a shelf that's lower than the second pullback of the shoulder. Maybe this is the area you want to get short if you miss this short. Then we come down and we take out the 1, 2, 3 drive to the bottom. So the 1, 2, 3 to the bottom gets broken. The 1, 2, 3 to the top holds. Note that every low has been broken. And by the way, I marked this incorrectly one of these, and compliance fixed this. So if you wonder if compliance at IB reads things, they read it word for word and are nice enough to fix my mistakes. Thank you. So let's see what happens. We leave a third shelf low. We keep breaking every low. We even break out the fourth shelf low, and look, we run away on this one. People are starting to get it. We run all the way down to 156.25. Every low has been broken until this low is formed. Price rallies to break the shelf above. See it? And the pattern is broken. This is the first time we rally back to a shelf. So I mark this as MLA. You can see I see MLA when we break the shelf, so that means here. When we break above, I see MLB. We're talking about alternating pivots. First alternating pivot, second alternating pivot. I'm looking for a higher alternating pivot, but I expect it to be lower than these shelves, than these 1, 2, 3 drives lower. So let's see what we get. That's my logic. That's my tactical decision. As price approaches the line of maximum excursion, so it breaks through this shelf, I begin to think about tactics. So you shouldn't buy something because it's going up. You shouldn't sell something because it's going down. You should be tactically thinking about if price gets to a specific area, is there an opportunity? And if there's an opportunity, how do I take advantage of it? That's the difference between an impulse trader, and impulse traders generally don't make it, and a tactical trader. What do I expect price to do to the right? I trade to the right. I don't think that much about the left once I start to mark up a chart. What do I expect price to do now? I see two barriers to higher highs. The line of maximum excursion is one. It's not the end all and be all. And I see a second one, which is the third lower high right here, right where price went down vertical. Take a look. These are nice, sustainable moves lower. Then we went vertical. So if we pull back anywhere in here with any sign of weakness, if I'm not already short, I'm going to be trying to enter a short. So this is the lowest high of 3 drives to the top. Here's the line of maximum excursion. How do we know which one to use? Well, we let price tell us. But now we have identified 2 areas, and you can even think of it as a zone if you want. There we go. The line of maximum excursion does not hold the rise in price. I still expect price to make a lower high. The next area that price will run into trouble is at the lowest high of 3 drives to the top. All right. So 1 drive, 2 drives, 3 drives. We break and go vertical. This is our second major pivot. This was our first over here, alternating pivot over here. Now we come up, we break the line of maximum excursion. Note how we break above gap, but the gap gets filled immediately, and then we move up. Note that we close on our low, Note that we close on our high, really at this advanced multi-pivot line, which is the lowest high of the 3 drives to the top. We close on our high, we have no follow-through, then we close on our low. So price tests resistance at the 3rd lower high, but then fails and closes with good separation to the downside. And by separation, I'm talking about look at the open, look at the line it's testing, look at the close. Tremendous separation. If there is an opportunity, this will most likely be it. I guess I can't spell. Or this is most likely it. I guess I can spell. Looks like an opportunity, feels like an opportunity. I want to be decisive in my trading. You have to be decisive. If you have a tactical plan, when price unfolds as you think, don't dither, don't sit there and wonder about it. Maybe I'll buy a bar, maybe I'll think about it, I don't know, I've been wrong before. Trade or don't trade. If you've made your plan, execute your plan. So let's see what I get. Price swings lower, closes at its high. So I see it coming back into the lowest high of the 3 drives area. I don't know if it'll make it all the way up, but I don't want to miss this opportunity. I have tactical thinking. Now I need strategic execution. As price swings back up near the area of resistance that has already been tested once, I use an aggressive order below the prior high. I do not want to miss this opportunity. And remember, if I'm wrong, it's only one stop. Okay? How do we set the stops? We take a look at the average true range. We add some measure of noise, and this bar in here, this translucent green bar, we call that a go, no go. We decide how much we're going to risk, and then we put it up so we can decide how low can we sell and still stay within our go, no go. It's a great visual tool, one I definitely recommend everybody use. So you can see my aggressive sell order. It's below the line, below the highs, and my stop loss is a good 1/3 of this ATR above this high and both of these highs. All right. So I'm risking 500 cents, or the difference between 235 and 240 in the pound. If price gets to the line of maximum excursion, I will have risked 500 cents. If it gets all the way down here, if I get short, and I am now, I was executed, I was filled. So it gets all the way down to the line of maximum excursion, which is its first problem, because I said it could work as a center line, so it could be as above, so below. We could, if you take a look at this low and this high, they're about equidistant, and this would be the center line. So if we come down to the center line, I will have risked 500 cents to make 2,400 cents. And we need to know where our first problem is, and we really need that to be at 3-to-1. Because if price stops at our first problem, we need to already be at break even and maybe even a bit better. Now, on monthlies and weeklies, we generally have difficulty, unless it's this big of a run, finding areas to put stops underneath or above. If it's this long of a run, we have plenty of time. But if it's like, sometimes it goes like this on a weekly or a monthly, it's vertical, and we have a great deal of difficulty boxing in profits, but we'll see if we can find something. Now, let me just say it again. If price gets to the line of maximum excursion down here, we're short right here at this red line, I'll be risking 500 cents for the difference between 235 and 240, and I will be making 2,400 cents, which is a risk reward of about 5-to-1. If it breaks below the line of maximum excursion, take a look. It looks like there's clear air down here. It looks like it might run. My only concern would be the center line, because it's about equidistant between this run and this major low here. But if we get below this center line, it looks like it could run and at least test the second major pivot, which would be a tremendous profit. So let's take a look. And this was an actual trade, by the way. And yes, I do keep records as far back. Let's see. At this point, I'm just about to get out of the silver position I had, and I had a little bit of a gold position for the Hunt Brothers run-up. All right, so as price breaks through the line of maximum excursion, you can see this. I say to myself, I see MLC, which is the third alternating pivot. So we've got one alternating pivot, the second alternating pivot, and the third alternating pivot. So alternating pivots are highs, lows, highs, or lows, highs, lows. So I've got this as a high, this is a low, this is a high. I now draw on my median line, Dr. Andrews' famous tool. I bisect the B and the C, or the second and third pivot, right in the center. Connect the line backwards. That gives me the slope. Move it forward. Copy it. Put it on top. That gives me the upper parallel. Put it on the bottom. Gives me the lower parallel. Of course, today, Charting tools can do that automatically. But even if you have a charting program that doesn't do it automatically, it's very simple to draw. I drew it by hand forever. Price seems to be in a free fall. We're short at this red area. And it should test the base of the mountain. This is what the fifth graders trade on. It's called mountain trading or crayon drawing. And it should come back and retest this base. And this base just happens to coincide at least a little bit to the right with our median line. And we know from statistics that once price leaves the upper parallel, it's headed toward the median line, and with 80% probability, statistically proven, 3 doctoral dissertations written on my work on these statistics, but there are many more. 80% probability it will make the median line. When it gets to the median line, the statistics change. Then it's 43% it will stop and reverse, 43% it will break through, and of course the balance is that it will congest. So we're looking for it to get at least to the median line. We've already got lots of money in this, but it is a monthly. If you're writing a monthly, you do expect to make lots of money. Now watch what happens. Price comes down. We're well above the mountain. It basically tests the median line. It's 3 or 4 cents away from the median line, but in a median line this wide, I'm going to call it a test of the median line. And you can see it has a nice little pullback. So price approaches the median line, pulls back. Now the importance is whether or not it heads toward the upper parallel, or this is the extent of the pullback. What do I do immediately? I put out another advanced multi-pivot line. I could and should have a blue low one here, but I think I probably didn't put it in just because it would mess up the arrow. So let's see what happens. I do put in a red advanced multi-pivot line on the top when we do not follow through. I've already got one on the bottom after it forms and we don't follow through. So now I've boxed in price. When price clearly breaks below this box, I have so much money in the bank, I've got to start boxing in profits. I cannot let this turn into a loser. And with this amount of money, I can't afford to let it even go to break even. I need to take some money out of this market. So what can I do? We've left a high here. We'll put our advanced multi-pivot line. And I'm not going to use the entire 5 cents. I'm going to use about 2/3 of it, 300 cents, or the difference between 150 and 153. Okay, I'm going to put a stop 3 big figures, which is 300 cents, above this pullback high, because we've broken below the box, and that's my first box in of the profits. Okay, and you should practice this. When you practice, if you're going to hold positions, if you're just going to, there's nothing wrong with taking your profit right here, by the way, but if you're going to try and lengthen out your profit targets, then you have to box in profits. We work this a lot in Breakfast with the Masters at Market Geometry, which is 7 o'clock in the morning Arizona time, twice a week. And because we get a lot of markets that run, it's a two-edged sword. Do I want to take my profit at 3 or 4 to 1, or do I want to try and let it run? And that's a personal decision that you have to make, but you have to do it consistently and keep records. But if you're going to box in profits, you need to practice it. It's an art. It's not a science. All right. So now we come down and we do test and break not only the second major pivot here, prior low, but also the median line. So we briefly break below the median line, and we leave a new low before pulling back. take a look. We close on our high, no follow-through. So we leave a high and begin to sell off. So we mark the high. We've done nothing with our stop order yet. Our stop is still up here. Our profit, at this point, it's a nice profit stop. But we found a high. Now we have to find a low, which is right here. So we mark that low. We've got the high. And until we break through it, we can't put the order in. But once we break through on this bar here, we break below the shelf, then we can take our profit, our 300-cent profit order from this box and mark it down to here. Now, if you're going to do this, box and profits, it should be in your trading plan, and everybody should write out a trading plan. If you don't know how to write out a trading plan, or you would like a forum that will help you write out a trading plan, you can go to marketgeometry.com, look for free information. That'll give you several things. One, there's an area that gives you all kinds of forms like this that are pre-written out. All you have to do is just fill them in. It gives you all the links to every one of the interactive broker sessions that I've done all the way back to 2008. We're going to try and add some older ones, Cynthia. But these are the links directly to interactive brokers. But I've got recordings that go all the way back to 2005, and we'll try and get all those up there. There's also articles, but, you know, if you don't know how to write a trading plan, go there. You can pick up a free trading plan. You can pick up all kinds of interesting information there. If you're going to box in profits, plan it before the trade. Don't plan it on the run, even though if you're trading on monthly, the run is awful slow. Okay, don't change your plan in the middle. So we're breaking through. Once we break and close nicely below, we take our 300-cent stop, move it down to the top of the new box, and we just, if you can see, we just just about double the amount that we've got locked in. Okay? All right. Once again, price leaves a high. You can see we're down below the red median line, and now we come right back to it. We pull back, we call this on the back side of the serpentine side. We pull right back to it and close on our low. We can't get above it, so we leave a high. We put out that advanced multi-pivot line, break through and accelerate. We left this bottom. We put this out as an advanced multi-pivot line. When we broke through this one, we can move our profit stop. It's not a great amount relative to this one and this one, but it is actually quite a bit of money, 300 cents above this top. And we'll just keep doing this until either we hit the lower parallel, which is what my trading plan said, or we get profit stop down. And you can see we got short in 1991. It's now middle of 1984. Now, those of you that have been trading a long time may remember, or those of you that have studied history may remember, that at some point in 1985, G5 was formed. I know it's G8 now, but G7 happened after G5 and then G8 because they didn't want to leave the Russians out, which I think they should go back to G7. But G5 was formed, and I was part of one of only 3 banks that did the intervention for that. And one of the rules that we had at J.P. Morgan and Commodities Corporation at the time was that you could not have a position in something that you were working customer orders for. So I had to close my position, which was fine anyway, and you'll see on this next slide. So we come down and leave a low, and we call this a headstander. Huge turnaround, and I'm forced out of my position here by management rules. This is the planning of G5. G5 didn't actually happen until the middle of the year, but the planning started much earlier because they wanted to talk. They wanted us to get long the dollar. They wanted to stop the fall of the dollar. They wanted us to get long the dollar. They wanted us to get our customers long the dollar. They wanted to turn the trend. They didn't want to spend money yet. They didn't intervene until much later, but first, They didn't announce it, but they were much smarter about it. They started the drumbeat behind the scenes privately. The market turned nicely. And you can see, even if I wasn't taken out by the corporation, what happened? What would have happened? Didn't get to my lower parallel, but that's okay because I would have profit stopped out when it took out this high here at 153.55. So I risked 500 cents, and if I got stopped out here, I made only, oh my gosh, 8,750 cents, which is a risk reward of 17.5 to 1. Anything above 3 to 1 is golden. 3 to 1 is that magic number where if your risk reward is 3 to 1, your profits will actually begin to go parabolic. You'll see it pays for so many stops. Think of it this way. If you make 3 stops on one trade, 3 of your normal size stops, that means you can be wrong 3 times and still be playing with the market's money. So gross profit on $100,000, okay, 240,500 minus 153,000 equals 87,500. If you ever wondered how to do that calculation the easy way, that's the easy way to do it. It's a lot of money. Almost double your money. If you got taken out down here, it was double your money. 100% on one trade, very nice. So this is a V bottom. It's very difficult to catch. I'm not going to stand here and tell you that I caught the V bottom. I was forced out of my position by a corporate policy. And in this case, it was good. It didn't serve me well in 1987 in the S&Ps. When the S&Ps were falling, I was short the S&Ps. I got out for a very nice profit, but I left about half the money on the table because it took the Fed about 3 days of buying, and I was doing intervention for them before it turned around, and it went a lot lower. But rules are rules. So let's take a look. Take a look at this rundown. This is extremely important, and I see this a lot in mentoring students. I see this a lot in people that send me their homework from Breakfast with the Masters, as well as our premium membership, our midday sessions, which are 3 days a week. It's Shane, Blankenship, and I. And people that are unable to sell up in these areas, as price comes down, we call it revenge trading. Well, I didn't get short. Let me try and pick a bottom here. This looks like a bottom. Let me try and pick a bottom. Oh, this looks like a bottom. No, let me pick a bottom. And, generally, price will turn, but you won't be on board if you make a revenge trade. One of the rules we had at Commodities Corporation was, if the trend is down and it's a nice strong trend, you don't get to try and pick a bottom unless you were short. So you have to wait for a clear turn and prior swings to be taken out before you can trade the other way, unless you were on board for the trend. In other words, unless you were intimately involved with that particular instrument, you don't get to just pick a bottom or pick a top. You have to wait. And that saved a lot of people a lot of money. It was a great place to learn how to trade. At one point, I was a mentor there. We had 167 traders. 8 of us were senior, and the rest were all traders in learning. And you'd get a salary, and you'd get a bit of your 20% of your profits if you were in learning, so to speak. And most of the people were in Princeton at Commodities Corporation headquarters, but I had, 25, 26 people in Chicago. I was a North American mentor. We had some people in London. We had some people in Asia. And it was a great place to learn how to trade. Places like that just don't exist anymore. So we do our best to create it here, as well as for 5th graders. And now we're doing senior high school students. This is the first year for that program. It's a very, very small program. And we'll see how that goes. So this is the important message. If you can't find a place to get short on this way down, that offers an acceptable stop loss hiding behind market structure with good risk reward. Let me say it all again. If you can't find a place to get short in this rundown that offers acceptable stop loss hiding behind market structure with good risk reward, it's your job to be patient and stay out of this market until the conditions change. Your biggest edge as a private speculator is your ability to choose when and if to trade. And remember, there are three positions: long, short, and not now. So flat is a position equally viable to long or short. You may miss an opportunity, but you won't lose money if you're flat. So if price is in a strong downtrend and you can't find a place to get short behind and be able to hide your stops behind structure, stay the hell out of the way. Do yourself a favor. You're going to save yourself a lot of money. Wait for the conditions to change. You will find a place to enter. So once price begins to nosedive lower, there is not a single place you should be attempting a long position. And you can see the prices decline, gentles a bit here. My partner even has a name for this. It's called flung. It goes hard and then more gentle. And it does have a few 3 or 4 bar pullbacks, but there's never anything that should prompt you to go long until after price forms this V bottom and then climbs above its first prior swing high. This is where I would have been stopped out for a nice profit. This is where my profit stop was at, right? All right, so let's take a look. This is that V bottom right here. And you can see the profit stops. So price made a V bottom, ran all the way back up to 200 again. How incredible is that? So we went from 106 to right back up to 200. Now, here, I'm just looking for the frequency. I connected these tops, put them on the bottom, ran them across. Really didn't amount to much for me. And now, as I look at it, now this is my portfolio trading. I'm not talking about intraday trading, my portfolio trading, or if you're practicing. As you look at it, we're kind of in the middle of a range. We've got a top here. We left double tops. Then we had an extremely fast sell-off. Then we went into for a monthly, a relatively tight range. And we want to know two things. What's the quality of the bottom? What's the quality of the top? So what do? I use the tools I have. I draw in a maximum excursion line. I take this high. I take this highest pullback, move it forward. And we're just testing it now in red. Okay. Then I've got the lowest low. We've been down here one, a second time with double bottoms, and now a third one that's even lower. I connect the first pullback, which is right here, and the bottom, and this is my new maximum excursion line. I'm going to extend it forward. So we'll see if this one gets broken. Obviously, things are coming to a head. They're narrowing. One of them is going to give away here. But and this is the lowest low so far. Here's the high, 203. What's the quality of the top? What's the quality of the low, of the bottom? Sorry, right in here. So we're tactically thinking now. So here's what happens. Our down-sloping maximum excursion line gets broken, and you can see we get a run-up and a pullback, and a run-up and another pullback, and maybe this is an area for you to get long. You could afford this stop. Then we go vertical. And take a look. I just marked, this is called a multi-pivot line. You can see it's got a high, it's got a bunch of highs in here, then it uses some lows all the way across, and it's kind of demarcating, it's like a line of balance. When we're up here, we're very, very strong, and we've left all of this behind. And notice on my line of maximum excursion, as we come down and retest this shelf area right here, this was our prior range, this set of bars leaves the same frequency as the line of maximum excursion. So maybe this was an opportunity for you. So price finally breaks above the prior multiple highs, running stop loss orders and stop entry orders, and gets people long this market. When we get up here, you can see the market's long. That's one thing that you should be asking yourself all the time. What are the market positions? And if it's obvious to you, it's generally an opportunity if you have a stop, or maybe you want to wait for a stop to be built, for example, in this area. But when this bar prints, you can see it doesn't pay to be short. It didn't pay after we broke out above this shelf. Even when we ran back down, we couldn't get back below this shelf, and now we're taking out all highs, leaving nothing but higher lows all the way up. And when we get up here, this is simply a case, it's not intervention or anything like that, it's simply a case of there's one more seller than there is buyer. Everybody's long. One guy says, I've got one contract to go, and the whole thing, people look around at each other and say, I'm long? Are you long? Oh, you're long too? And people start to take profits, and that's what happens generally in a market move. Yes, some moves are caused by whales. Almost no moves are ever caused by governments, unless it's a major policy move. But in terms of intervention, they're so much smaller than large hedging positions or the size that I can trade or that other whales can trade. Almost no high or low is ever formed by a government. Generally, it's because the market has gone to an extreme, everybody's leaning one way, and they get caught. That's the nature of people. So we pull back, and you can see we come right to my slope line, dance, pull up, can't get up here. See, the air is very rare up here. Look at this spike. Pull back, and it's a higher low, but then we make a lower high. Maybe this is an opportunity for you. Maybe this isn't. The stop's very expensive. And then we go absolutely vertical, as vertical as we were right here. Longs are forced to liquidate. Fresh short positions are initiated when we do take out this bottom. And price couldn't get more vertical. Basically, we're just connecting lines that are straight down. So we go 1, 2, 3 lines. It doesn't matter if that's 3 lines, but it's just absolutely on a monthly basis straight down. The market is absolutely short or flat. You cannot be holding longs. That's an incredible amount of money if you're holding longs. However, that being said, it's easy to say that the market is short at this point or flat, but there are no opportunities. And again, we're back to tactical thinking. You have to take a look at the chart. Do you want to sell here nakedly, just sell? Well, your stop's all the way up here. Your best stop is right here. Can you afford that? No. We're talking about, $12,000 or 12 cents, excuse me, $120,000 per $100,000. Do you want to just sell here with a stop up here? No, that would be suicide. Do you want to buy? It's vertical. It's like catching a knife. It may go here, it may go lower. We may go all the way back to 103. I didn't think we'd see 200 again, and we did. We could certainly see 103 again. We have to wait for the market to give us mature structure. So let's see what happens. The market is short, but there are no opportunities yet. All right, let's take a look. So you might have found a way to get short here, but once price goes vertical, there are no opportunities, and you must be patient and wait for conditions to change. I cannot emphasize this enough. If there are no opportunities, then that means your ability to take a position with a quality stop, a stop that allows you to hide behind structure and that you can afford, that is the same as your normal stop size. You have to be patient and you have to wait for conditions to change. So let's take a look at the bottom. We come down, basically in this area, we're a little bit lower, but give or take a little bit. We come right down into this area, and look, it's 1 drive to the bottom, 2 drives to the bottom, 3 drives to the bottom. We're just going to use this as road signs. Now, unless you're trying to buy the retest after price left that spike low. So we came down and left the spike low, pulled all the way back up to these bottoms, and then turned back and left a low. Now, I had a currency trader by the name of Boom Boom at the Bank of Malaysia, Bank Bumi Putra, so we call him Boom Boom. And he was the largest trader in the mid-70s in the Asian time zone, and he used to execute my orders, and then one day he called me and he said, you know, you trade too late. I want to teach you how to trade turns. And Boom Boom would be buying on this bar, the second bar right here. He wouldn't be playing around in here. And he was very good. He didn't use charts. He listened to price on the brokers, on cash brokers. But Boom Boom was just amazing at finding bottoms and tops. But unless you're Boom Boom, this is a difficult entry. Later on, and we teach this in the breakfast session, but it takes lots of practice. And you have to be very, very decisive. And you have to be able to, you can see that it's within my 5 cents, but you have to be very sure of your ability before you go making this type of trade. So there are no long opportunities for most of you. And again, you must show patience. There will be a trade, even in this monthly. So we find mature structure is being built. But we still don't have an opportunity. Are we heading higher or are we heading lower from here? So what do? I already have this line of maximum excursion. And it showed up again here. It seems to be in price. So I copy it to the low, and I copy it to the high, and that gives, we call this the reflection of the maximum excursion. Okay, it's just an action-reaction line. I don't know if price is going to go up and test this median line. Now, I also drew in a median line, and you can't see the low, but the low was at 106 that we made all the way back here. Let me run real quick. This low right here at 106, see it? That 4th major pivot. So I use that as my first alternating pivot. Then I use this high at 211 and change as my second alternating pivot. And then all the way back down here at 135 is my third alternating pivot. And again, most charting packages allow you to draw it automatically. Grab the low, grab the high, grab the low, move it forward. So now I've got an action-reaction line set in brown, and I've got my median line set, my lower parallel, my median line, and my upper parallel in green sitting in front of me. I've got mature structure, but it's going to have to break out of this tight range. Not that tight, but it's got to break out of this range for there to be an opportunity. We're in the middle of nowhere. All right. Price comes down and tests this maximum excursion line. But you can see it's a 1-bar test. There's no retest. I really like tests and retests because with 80% likelihood, it filters out the chance that you're going to zoom through and just keep right on running. But we're still asking the same question. We've got 1, 2, 3 drives here to the bottom. What's the quality of the bottom? Now, here's what I like. 1, look at the second one. 2 is lower. 3 is even lower. We pull up and we leave a higher low. So we leave a low and then a stronger shoulder or a reaction. So Amos would say, don't buy the bottom, by the reaction. If it's a stronger reaction, if it's a higher high, then tactically you'd be looking to buy the high. Now, it seems like it's gone an awful long way and it'll never come back, and most people try and chase it up into this area. Don't chase. Think tactically, make a plan, live with the plan. And again, this could be 3-minute S&Ps, so you might only be waiting 10 minutes, not 12 months. Now, I've just opened up the chart so you can see better. And here you can see price come all the way back down. It looks like it was never going to come back down. Comes back and tests the maximum excursion, but it's a spike high, comes back but leaves a lower high. So we've got our trading range. Price is just drifting sideways. And now we come down and basically, within a cent or two, test the lower parallel. Was that significant? The question is it significant to you? You're the one that's going to have to be decisive. So let's take a look. You have to pick your structure. If you decide that you're going to go long, and you don't have to take this trade, this is a trade that I diagrammed for. We also have Evening with the Master, which meets once every 2 weeks. It's for long-term portfolio trading. And I diagrammed this out live before we took it. Take a look. If you're going to take this trade, you have to decide whether or not you can afford it and what your stop is going to be. Is this the low that you're willing to lean on? Do you think that other people are going to have orders to buy because they missed this low here, right under here, to protect you? Or do you think your stop has to be underneath this alternating pivot all the way down here? This one will cost you 8 points or 800 cents. This one will cost you 13.5 points and probably be too expensive for most of you. The nice thing about foreign exchange, and of course IB does do foreign exchange, is you can vary how much you're risking by position size. Same thing in stocks. So you can choose which structure you want to lean on and how much you're willing to risk and vary your position size based on that if you wish, if you want to buy. Now me, I'm willing to buy a retest as long as we get in here before it goes. See, if it goes much further, because this is an upsloping line, it's going to cost me more and more and more, and pretty soon I'm not going to be interested in trading it. So it needs to retest soon. But I'll buy a retest, and I'll put my stop underneath this low. And this is a live trade. In fact, I'm still in this trade. And this is not a small trade. My fund, Blackthorn Capital, which trades for, it's a sovereign wealth fund, trades for the 5 largest sovereign wealth funds in the world. There are quote-unquote C shares. This is me denominating them all from the dollar into the pound. It's a huge trade. Big decision. So price comes back and retests, you can see, and we leave double bottoms right here. And the fund gets long pounds at 148.50. And people in Evening with the Master had the decision to take it or not take it. And actually what I did was, because people are learning to portfolio trade in Evening with the Master, whether it's because of their IRA or they want to learn to trade longer term, or because they work during the day and they can't trade intraday, so they need to hold longer term positions. I make them take simulated trades. I allow them to take trades that they want. They start with $100,000 in simulated cash. They have a maximum margin. We talk about margin. We talk about equivalent risk, all kinds of things that I learned from Amos Hofstadter as well as Commodities Corporation and running a portfolio there. And with this particular position, I put everybody into the pound. Everybody had to get long a monthly trade because probably almost none of you have ever been in a monthly trade. So I forced everybody to get into this trade. 148.50. Now, There are lots of people that like confirmation. And confirmation means, for example, in this case, if you're going to get long, you can't get long, you don't feel comfortable getting long unless this high gets taken out. The cost to confirmation, getting long at 148.5 versus getting long at confirmation, would have cost you 2,200 cents. So that's basically, well, on $100,000, that would be $22,000 if you wanted to wait for that high to get taken out. The difference. And so I'm not a confirmation guy per se. I'm looking at the quality of the bottom. I've got higher lows. I've got a test and a retest at a median line. I know what the statistics are on a median line. If price doesn't break it, price should now go up to the next upper parallel. I'm never going to chase and get in here, because if I try and chase, when this bar happens, for example, if I try and chase, my stop is huge. So I'm always a limit buyer, limit order buyer, or a limit order seller. I always have stop losses in the market, and I always have profit orders in the market, and they are always limit order sells. Okay, we never go to the market. So our people in Evening with the Master are long at 148.5, and right now we're just below. Last time I checked, $1.70. So quite a bit of money in this trade, but not what we're looking for. We're looking for a test of the median line, and maybe even the upper parallel. We'll see what develops. So once again, even though I showed you some trades, and you're more than welcome, you're going to get the slides afterwards. Go back and look, and you can go back and recreate these trades and run them. Print out the, when you leave, you'll be able to get the slides. It'll ask you, would you like the slides? You download them in a PDF format. You can print them out. You can keep them as a PDF on your computer. Then you can go to monthly British pounds. And by the way, if you don't have it on your charting program, if you Google monthly British pound data, there's 100 sources that give it away, including the Fed of St. Louis. That's my favorite spot. Ensign, you can download it from Ensign. So you can go back and practice this on just about any charting program that allows you to enter data that you wish. You can put it on Excel and practice it. And go ahead and take a look and see if these make sense to you. See if you can identify the major pivots. That'll be a springboard for you. Then take that. And I'm not talking about looking at S&Ps that you're going to trade today and going back in the monthlies and saying, well, I shouldn't get long because, in the, et cetera, et cetera. This is just for practice. If you can see these pivots form and you can think tactically once you think you can see them, it will improve your trading dramatically. You should practice regularly. And once you start to see them on dailies, weeklies, and monthlies, you can move in some. You can go to 240s. You can go to 60 minutes. If you trade 10-minute S&Ps, you can start practicing on 60 minutes. But the importance is practice on something that you can see. And slowly over time, your ability to see turns in real time will improve dramatically. And you'll suddenly have a 3-bar advantage, a 5-bar advantage, an 8-bar advantage, a 10-bar advantage. Imagine if you're a 10-minute S&P trader and you have an 8-bar advantage on the market. You have a tremendous tactical advantage. And that's where we would like to help you get. Okay? So it's important that you practice. This is just one tool, but it's one of the tools that we teach, and I highly recommend it. So I think with that, yep. Before Cynthia cuts in here, let me just tell you, she's going to do a poll, okay? And I don't care what, if you grade me good, bad, that's indifferent, that's how you feel. But what's really important is right in the center of the poll, then I'll take questions. In the center of the poll, there's a little slot where you can write something in. Write webinars, or write more Cynthia, something like that, to give Cynthia props with management, because she does such a great job as an educator that'll allow her to get more of what she needs Not that she doesn't get it from Mr. Peterfly, but it'll allow her to get everything she needs from the IB people. I'm sure I've been with her since 2005. I don't want to date you there, darling, but you know, she's the best there is in terms of getting education out there, as well as Barbara Schmidt-Bailey, and now Pete, who's following in Barbara Schmidt-Bailey's shoes. Good luck with that, Pete. So with that, Cynthia.
Okay, well, thank you for that lead up there, Tim. Actually, I'm going to open up the poll right now. And you'll notice there are 3 short questions there. If you would simply make your selections and then use the submit button, which will allow me to compile those results. Now, I noticed that there are several of you have been putting questions in the chat panel, and I do appreciate your patience in opening it up. But what I'm going to do right now is actually let me go ahead and I'm going to send those questions back to our panelists, but I'm also going to open it up, and you'll see in just a moment, once you submit that poll, you'll be able to access and send those questions as well. Now, notice poll's about to end, everyone, so please click that submit button now. Thank you very much. That really is helpful. Okay, now to close that polling panel down, simply use the X that's included in the title bar. That will take the panel completely out of your way. And also now, your chat panel may have collapsed at the bottom of the screen. Simply double-click that title bar, and you can enter any questions you have. But first, please, rather than you'll see that send to boxes on host, if you would, click the drop-down arrow, and you can change that to all participants so that we can all benefit from any of your questions or comments. So thanks, everyone. Tim, I sent you a few to begin with.
Thank you, darling.
I think some more are coming in right now.
Yeah, I see some, and I see some from new faces, which is always a pleasure. So thank you. All right, let me see if I can get to it. Al, how are you? How do we practice replay? Just looking at these past charts? That's one way. Some charting packages, Ensign, NeoTicker. I can't speak for everybody else. Cynthia, I'm sorry, Cynthia. Let me do just a terrible pimp for you. Tell me again the name of the new charting package that you're.
Multi-charts.
Multi-charts. Excuse me. Multi-charts has replay. So, you know, is it fully implemented now?
Yes, it is, and if you want to find more out about multi-charts working through the TWS platform, simply type in multicharts.net/TWS.
There you go. So I don't know if they bought, doesn't matter to me, you don't have to come back in and tell me. I don't care if they bought them or if they're just doing a white label with it, doesn't matter. That's a very nice charting package that allows you to do replay. So you can put data in multi-charts, and you can then say to it, okay, I want you to replay the last 3 days. I think Ensign does up to 3 days worth of data, and it'll, for example, and it supports up to 30 times speed. So you can do it that way. There's a guy that actually, I haven't seen it in a couple of years, but he was pretty cool. He actually sold this little cardboard thing. You could put up a chart inside, 8.5 by 11 chart inside the cardboard piece, and then slide it bar by bar. Of course, you could do the same thing by just putting a piece of paper over the chart and move it forward one bar by bar. But you don't even have to do that. With every charting program, you can move it one bar at a time forward or backwards, okay? So that's another way to do replay. So that's how I would do it. And that's how I do it 3 times a week at least. A lot of times, especially if I have had time off, if I've been ill or I've taken vacation, or if I put myself in the penalty box because I broke one of my rules, which happens. When I break one of my rules, I take a whole month off of trading, if you can believe that. On the way back, of course, I need to knock the rust off, so I do replay. And then I start to trade small. Hi, Jay. How are you? And good to see you. How do I know if the reaction is weak? Well, a weak reaction means that, for example, if you're selling a top, it's a lower high, okay? And generally, you're not going to sell even that high. You're going to see that it turns first. And they're going to say, aha, that's a lower high. Okay, now I'm ready to get into position to trade. What time frame is the first pound chart? They're all monthly. Every chart you saw was monthly. I thought they were marked, but maybe they weren't. William, good to see you. After the second major pivot price, pivot, price seems to make 4 drives to a new top, that is even with the lowest high of the previous 3 drives to the top. I see this correctly. After the second major pivot. All right, hang on. Again, let me just say this, William, before I even go see if I marked it incorrectly, but I doubt I did. Well, I don't need that much. William, it's art, okay? And, all right, so we've got 1 drive to the top, 2 drives to the top. This is our 3rd drive right here, okay? Now we're in business. We've got 1 low, 2 lows, 3 lows. We're in business. That's all we count. Now we just want to know, is it going to break one? And we do. Game over. We don't count anymore. We don't count 4th, 5th, 6th, 7th. 1, 2, 3. Now, if you want, you can say this is 3 and 4, but it's the same. You can just see it as a shelf. 1 drive, 2 drives, 3 drives. Gone. Game over, okay? And again, you don't have to use 3 drives to the top. This is not something that, it is something that I use in my trading. Those of you that have been around a long time may note that I'm showing things these days that I have never shown before. There's a couple reasons. One, and most important, my agreements with Commodities Corporation as well as Amos and Dr. Andrews have rolled off and are rolling up. There are still a few, but basically, even though Amos has passed away, even though Commodities Corporation doesn't exist anymore, I'm a gentleman, okay, and when I make an agreement, I don't break an agreement. So I did not talk about Amos for the longest time because I had to wait for those codicils to roll off. A lot of the things that I learned and taught at Commodities Corporation, I did not talk about because I waited for that particular agreement to roll off. I've got some other legal agreements with both the Andrews family, the Marichal family, and the Babson family that are rolling off shortly. And when they roll off, I'll be able to show more. These 3 drives to the top, as we teach, I'm just showing you more of the tools that I use in my own practice and setups as I think tactically, and nothing more than that. Let's see. Well, I use monthly time frame for today's webinar. The idea, TJ, was simply to show you these highs and lows are just easy to spot. If I'd used an 11-tick E-mini S&P, they're not that easy and not that straightforward. This is the top. There's no top higher than 264.5. There's no low below 106 and change, okay? And they're decisive. And the idea is to just show clean, clear, decisive tops and bottoms. Start out by looking for the big tops and bottoms. Then you can start to move in and make decisions on the smaller tops and bottoms. But first start working with the major ones. That's all. Is the shelf the same as a multi-pivot line? Yeah, sure, absolutely. That was from TJ. Arturo, how are you? As always, great precision, thank you. What's the best time frame for your median line analysis? There is no best time frame. It'll work on anything from 1 tick out. As Dr. Andrews says, it works on anything that fluctuates any time frame. What's the lowest time frame where median lines will work? They'll work with anything you can chart, period. They work with weather, by the way. And here's a good one for you, Arturo. And I teach this in mentoring. Start charting your profit and losses, your P&L. And if you've been trading long enough, if I were you, don't look at it daily, but take a look at your monthly P&L and put a pitchfork on it or a median line. Arturo, how do you know, quote unquote, you have chosen the quote unquote correct pivot to draw your median line? I just try and use the largest pivots, the major pivots. There's always information to be gained, even if you pick an incorrect one, Arturo. We've done studies that show, for example, in my first book, we did in the S&Ps, we did every single alternating pivot. So we would mark, for example, even these in here. And if a median line's broken, it's given you information. It may not give you the entry information that you want, but you now know that prices, if it's broken to the downside, price is weak, for example. So don't be afraid to draw. Lines are cheap, but start out by drawing with the major pivots. If price then breaks through and makes a higher high than your C or you know, one of your other alternating pivots, simply move it or erase it if you need to. Steve says, what's a telltale sign that a whale has entered into or selling a position, aside, I guess, from the obvious volume trade? Well, you can't trust volume, Steve, unfortunately. Is there such a way to determine that? Washes and rinses, and here's a good example right here. You can see here we got to the shelf, and we bounced, and we come back here again. Now, this is a monthly. This is probably not a whale. But if you saw this in the EME and the S&Ps, and you saw somebody push it off the shelf and then see it close up in here, this is likely somebody that needs to take some back in. So what does he do? He pushes it off the shelf so that he can buy them back. Well, then the market starts to understand, so they, of course, follow through. But notice that it leaves a lower high, so the trend is still in effect. But there are obvious signs, but you shouldn't spend too much time worrying about whales. Instead, just worry about pivots, obvious pivots. What do you mean on practice what you can see? BM, do me a favor and restate that, and maybe I can understand it. And I'll try and answer it for you. Eric, how are you? Is there a cost for the multi-charts replay? To be honest with you, I haven't used I own multi-charts outright, and it was given to me from them, obviously. But I don't know if I have IB's version. I don't know the answer. I'm sorry, but that's okay. Just go ahead and try it. Great stuff. Can you show the anchor on your most recent median line on the pound? I can only show you what's up here because I can't draw. The anchor. Yeah. Yeah, it's right. Sorry. You'll have to go back and recreate it yourself, but it's this fourth major pivot at 106. It's the lowest low, 1985, right before intervention. This is where I anchored it. This is my A pivot, okay? And then you can see B and C here, 211, basically 134. So 106, 211, 134. Let's see. My pleasure, Ken. Nice to see you. Which is the lowest time frame? I already said that. Oh, which is the lowest time frame one can use for today's way of trading? You could do this on 5-minute E-mini S&Ps, 5-minute gold, 888 tick gold. Doesn't matter. This was more just an idea to show you easy, clear pivots. And also, if you're practicing on monthly charts, daily charts, weekly charts, it gives you time to tactically think about it. So if you just back up from whatever you're used to trading and practice on something further back, let's say you're a 5-minute E-mini S&P trader, practice on 60 minutes. It gives you a lot of time to look for big pivots. It also gives you a lot of time to think about what you would do if you were going to trade off of that big pivot. What were you expecting? What were you looking for next, and how would you react? If you practice those things, then when they happen in real time, you will learn to think and act tactically and strategically. Charles, how are you? On the slide where you take the first short position, when price came up and tested the line of maximum excursion with good separation, would you have tried to sell the line of maximum excursion? I don't really use lines of maximum excursion. I'll use what we would call frequency lines more than lines of maximum excursion. All right, so here's our line of maximum excursion. Let me go the first time up. So here, on the slide where you take the first short position, when price came up and tested the line of maximum excursion with good separation. So here you go. Would I take it here? What I don't like here is, you know, we're a speeding train. Now, if you had gotten short here or even here, remember, this is about 12 cents. If you're risking 5 cents and you're more than 2 to 1, you need to be thinking about going to break even unless you've got about $10 million in your account. If you're the average trader that has less than $1 million in your account, when you get more than twice as much as the amount that you were risking, you should be going to break even and saying, okay, I can't let this trade turn into a loss. And even if you'd sold here with great separation, you would have had the opportunity to get to break even. Hi, Johnny. Haven't seen you well. You review them all the time. Great. Heiko, how are you? Can I learn all your main methods of analyzing the markets in your 2 books? You're going to have to wait for market maps to come out. Can you learn all of my main methods? You can ask the people that take Breakfast with a Master, which is twice a week. I'm only scratching the surface. Every session I bring out something new, literally. I keep people's heads spinning. At the moment, we're tackling 3-dimensional and 4-dimensional charts and movements. However, I have a new book, Market Maps, coming out, and it will have a more comprehensive method with a lot more of my methods, and the idea basically is to map the market, which is what we do in Market Maps, which is our midday session, Shane Blankenship and I. And, you know, if you can do that, you're going to be in pretty good shape. And if I were you, I'd start by reading all the free articles. There's about 100 free articles at marketgeometry.com or medianline.com. Let me go to that. marketgeometry.com, medianline.com. Look at free resources, and you'll see all kinds of free articles. And there's a great deal of information. There's all kinds of videos. There's every one of the IB videos. This one will be listed in a couple days, although you're going to get an email in about 2 hours afterwards with Cynthia's link as well. Can this be used for stock day trading with 10-minute charts showing 2 days or 30 minutes showing a month? Of course. Do the charts have to be set for showing pre-aftermarket data? Nope. When I trade E-mini S&Ps, for example, the reason why I set them to begin at 8:30 Chicago time and close at 3 p.m., not 3:15, I'm talking about the futures, is because cash, the majority of stock trading happens between the 8:30 open and the 3 p.m. close Chicago time. Even though I know there's overnight trading, the majority of the trading happens between 8:30 in the morning and 3 p.m. Chicago time. So I almost always, unless I'm using tick charts, I almost always chart. If I'm using time-based charts, I'll use 13-minute or 39-minute or 15-minute, something that divides equally into that 390 minutes. You do not have to use aftermarket. You can if you want. If you don't use aftermarket, please write down on your trading plan the overnight high and low and just know where it is. Hi, Brian. Haven't seen you in a while. What's going on? Let's see. Let me move this up. Lost my place. There we go. Can you show the anchor? No, that's 106, Brian. Third breakdown is the tell, yes. If you're using 3 drives to the top or bottom or both, I like to mark them in pairs. Whichever one gives away after the third or as the third is formed is the tell. Rakesh, how are you? In the last 7 years, this is your second trade giveaway. Why? First, the soybeans that you had taken profit on. You also gave gold short range, yeah, and then talked about, is the pound trade is over and waiting for, no, I'm in my pound trade. I'm long the pound right now. Is over and waiting for coil to form, and then you will take position again. No, we're long right now. Blackthorn Capital, quote unquote, C is long, and we've got 220 cents in it, $22,000 per $100,000, and also the evening with the masters, and we give a lot of positions away there. We do some in the breakfast session as well. I don't like to do them that often in public because I got a lot of notoriety for showing a chart and saying that I thought the Dow was going down when we were at 13,500, and 2 days later Lehman Brothers went bankrupt, and you know, then everybody wanted to talk to me because the Dow was, and I said we were going below 7,200, and then, you know, CNBC, everybody else wanted to talk about it. I don't want to be known as a market forecaster. I'm not interested in that. If people want to do that, that's fine with me. It's not what I want to do. I want to teach you how to trade. So, let's see. Hi, Ed. How are you? I've tried finding information on your site for the 5th graders class for my son. Yes. Please provide a link. I don't have a link for you yet. I'm sorry. Is school started already for you, Ed? I'm unfortunately not in charge of this. It's It's the states, the 39 states that are involved in this particular program, and I can't even. It's all done through your school. So if your school has it, your 5th grade son and or now 9th and 10th grade children have to be in advanced classes, and generally it's a 2-month program in the fall and 2 months in the spring. This year it's going to be sponsored by Dell Computer, so that might help you, but I don't have a link. I'll ask and see if I can put up a link. I think the answer is going to be that I have to be at arm's length and cannot give it out. So otherwise I'd be giving it out here. How to mark that forced shelf low, slide 23 in full form of median line. Okay. Hi, Kershal. How are you? Slide 23. I know that's frustrating, but those laws are there for a reason why. Why did I mark this forced shelf low? Can you see that we were just motoring along and then we went flat? It's a very narrow range, and those can be very important. That's the only reason why. And you wouldn't mark it until it broke and made this bar. Then you'd mark that fourth shelf low. Okay. Let's see. I've got several friends here that are, there's 6 of us left that were part of the inner circle of Dr. Andrews. There's only 6 of us. It's hard to believe. But several of us, several besides me are here, and my love to you. I hope you're all feeling well and doing well down in Coral Gables, and I wish I was down there with you. There's a rumor that my children are willing to come in October, and if we get down there, of course, I'll spend at least a day with you guys, actually, and I know you guys want to see Sean and Lucy, so let's see. Is multi-pivot same as shelf? Often, yes. Yes, absolutely. But you can see sometimes, later on, let's find one that was used both ways. I think I've overshot it already. Yep, okay, hang on. Well, heck. Let me go slower. All right, so here's one. You can see this shelf is easy to form from these pivots, and then we dance above and below it. And take a look, and that's this one. Then take a look at this one. This high, these highs, and it's all high, all about highs and nothing but highs. Then we come back down. Now, here's our maximum line of maximum excursion. It's also a multi-pivot line. Take a look. High, multiple highs, highs, lows, lows. So that becomes a multi-pivot line. It's just sloped. Don't forget that things that are sloped can have the same properties. I'm trying to think if there's a better example here. Let's see as we come out. All right, let's take a look here. There's a gap right here. Take a look. It's the high of the gap. Then we've got all kinds of highs and lows in here. Then we've got 2 highs here, 3 highs here, 2 highs here. Down here you can see it's all about bottoms. Here you can see it's all about tops. So it's a mixture of both. How long does it take your students on average to learn your trading style, please? Hugo, that's a great question, but it's not one that's easily answered. I'm going to answer it using the best talent evaluator, quoting the best talent evaluator that I ever met. Elaine Crocker from Commodities Corporation. She's retiring this year, and she's in her 70s. And she was the president of Louis Bacon's Corporation. When you came to Commodities Corporation, even when I came in, I was given a huge amount of money, a record for anybody in their portfolio. They had about $7 billion, and I got a tremendous amount of money. But even when I got that large amount of money, her first evaluation of me was 18 months later. As long as you don't hit your stop loss on either side, you know, I came to quarterly meetings, but there's no discussion about what's going on. It takes that long, in her opinion, to get a good feel for what a trader's doing. Now, that being said, we've seen people that have taken off very quickly. We've seen other people, for example, I have some students right now, it's a husband and wife team, and they are red hot. But for their first 2 years, they took 2 years of mentoring, and they were still not consistently profitable. They took a seminar where we talked about advanced position sizing, and my partner Shane went into average true range and how to use average true range and noise to show how to use correct stops. I used a methodology to show how much margin should be used for each trade and how to do position sizing. Something seemed to click for them there. They became consistently profitable. And the real kicker in the end was breakfast with the master, where they got to see through my eyes twice a week, and they've really taken off. But that was a 4-year journey for them. So it depends on the person. I wish I could give you a better answer, but I'm just being honest with you. It's not a week, it's not a 6 week, it's a process. Think about it this way. We did this in one of the IB sessions. I know we talked about brain surgery, and we certainly, if we didn't do it here, we certainly did it in the midday session. And but you wouldn't want a brain surgeon operating on you after 6 weeks, and you wouldn't want somebody to trade your money if they've only learned for 6 weeks. And no offense to brain surgeons out there or any other doctor out there, this is as harder than being a doctor. This is as harder than being a physicist, an astrophysicist, a particle physicist. This is a process. It's difficult. Doesn't mean you can't make money earlier on in the process, but it does mean it is a process, and it takes as long as it takes. Let's see. Paul G says, do you have to check your charts every day to see if price is close to entry? What I do on my longer term charts, Paul, is I know I'm out if I have a fax. I just have them fax me. Don't even call me, just fax me. But I have an Excel spreadsheet, and I've got important levels. I guess I'm announcing this publicly probably for the first time other than at Market Geometry. I've been hand charting since 3 years before I became a trader. That's how I became a trader. I got paid. We were very poor. I got paid to hand chart instead of going out in the cold and picking up metal at a scrapyard from my father. The owner of the scrapyard was a huge trader, and I was interested, and so as a 9-year-old, he taught me to update his charts. Then he didn't have to update them. And I recently, in May, I was out for a whole month, and when I came back, I had to get everything back together. And, my children are at an age now, they're in the teenage years where they don't want to help Dad anymore. And so I had a monumental task of getting caught up in all the charts. And after my wife spending years and years and years to try and getting me to stop hand charting, I quit hand charting in May. So I no longer hand chart. But what I still do on my longer term positions and longer term interests is I watch about 27 different things for long term positions. And I just have an Excel spreadsheet, and I say, here's the area I'm looking at, and I say, here's the alarm area. Once it gets to here, I want to watch it more frequently. So, and if it makes a huge move, there's nothing you can do. So you don't have to check them every day if you're trading very, very long. No. How do I select which markets to trade? First thing, Richard, is I wouldn't trade very many unless you're portfolio trading, in which case you don't have to check them very often. And it's more difficult to even get 3 or 4 things to be working. But if I'm intraday trading, I don't trade more than 5 things. I don't have more than 5 charts up. And I used to. In 2000, I had 12 large monitors in front of me. These days, as I look at my trading, we're in a bad case. I'm literally inside of a mountain in Arizona. And I have 2 38-inch monitors in front of me and 2 to the left of me. The 2 to the left of me right now are off. They're sleeping. But they mirror the 2 in front of me. They're 2 separate servers, but they keep the same images up. And then I also have a 55-inch monitor in front of me, which is, it mirrors my main monitor, and my individual let's call them I guess they are brokers. They're the people that watch my positions for me, the graybeards, and they do happen to clear through IB. So I only watch 2 monitors now. I have 5 charts, but once I start to stock something, I just look at that chart only. I turn the rest of them off. I don't even have them up because I might catch them out of the side of my eye. I just minimize the other 4 charts and watch the one. Let's see. And the more you focus on one market, the more intimate you'll get, and the more entries you'll see in that particular market. So more is not more. It's less is more. Trust me. Are the probabilities behaviors of line of maximum excursion similar to Andrews pitchfork? No, they are not. They do have high probability in the 70s. In point of fact, if you had 3 alternating pivots, this line of maximum excursion is actually the AC, A being the high, B being the low, C being the high of a modified shift where you take the high and move it between the BC line down 50% and over 50%. So it does have a relationship to median lines, but it does not, because it doesn't always have the 3rd pivot, it doesn't have the same mathematical probability, unfortunately. Let's see. I just did that one. Hi, Jane, how are you? Thank you for the wonderful seminar. Would you combine pivots with other technical indicators like RSI and stochastics? Absolutely not. RSI and stochastics are lagging. I would never trade with them. Median lines, maximum lines of excursion, and prior highs, prior lows are leading indicators. I would never mix a lagging indicator with a leading indicator. If they work for you, if you like RSI and stochastics, you go ahead and mix them. I know there's somebody out there that teaches that. I absolutely disagree with it. I think I know better, but that's just me. But you go ahead. If it works for you, use it. If you're making money, don't change what you're doing. Keep doing it. If you're still struggling, I would take the squiggly lines off my chart. What do you call a slight penetration of a line and then a sharp reversal? What does it mean? It means that it was rejected at that line, and that line is probably a good area of where there were sellers or buyers, depending on how it was rejected. Hi, Amanda. How are you? Can you describe the characteristics of successful traders you know, and what trait would be the most important? The most important would be to master yourself. It's the hardest one. You have to master your emotions. You have to, like I said, you have to be smooth and rounded. You're not looking for a trade. You're not looking for profits. You're not greedy. You know that you don't feel well today. It's not a good day to trade. I had to take May off from May or June off. Might have been June, depending on when I got sick. But I got sick in May, and I took the entire month off. And I talked to Cynthia, and I even took the seminar off for IB. I basically just reduced my workload to nothing. And, you know, most people, unfortunately, they think that they're doing themselves a favor by having a work agenda. I must work today. I'm sitting in front of the screen. I must trade. It's exactly the opposite. Don't trade until you see an opportunity. Wait. That's your edge. If you're not at 100%, think about it this way. Every time you trade, you are trading against the very best traders in the world. So you don't want to come and play this game unless you're ready to trade. So that's the most important trade I can think of. I love your work in thinking and discovering you a month ago. Great. I got chills when I watched my first webinar. Your work resonated with me straight away. Amanda, if you have not gone to either Market Geometry or MedianLine.com, all kinds of articles, all kinds of free videos. You don't have to spend a dime, okay? And I would tell everybody here, I'd love to have you in Breakfast with the Master, Eating with the Master, mentoring. I'd love to have you with the premium session. But before I would do any of that, I would go through all the free stuff, and that'll keep you busy for a long, long time. So, and you can watch, oh my God, Cynthia, I don't know how many seminars. We've done a bunch. Definitely watch the seminars. Steve says, thank you for your time again. I got one question for you. You have a 3-pivot rule. No, it's just a rule of thumb. It's not a rule. Is there a statistic? I don't have a statistic. It's art. Let me just say that again, Steve. It's art. Not that I'm looking for that. I'm just wondering if you've done some type of analysis to come up with a decision. It's just, for example, I don't know if we've done pivot counts here at for an IB seminar. We probably have, but I don't remember when. But the pivot counts are also loose. They were developed by Dr. Anderson, who was the mathematics professor at MIT when Dr. Andrews was there in the 20s, when he was a physics professor. And Dr. Anderson also enjoyed the markets, and he had a loose count, pivot count, and they're just road signs. And he expected that everybody would have their own count and they would look slightly different. It's just to help you keep place in the market. So no, there's no statistics on it. It's meant to be more casual than that. How many candles are desirable per time frame? Barbara, I think you mean, yeah, I mean, how many bars? Do you mean on a chart? If you mean on a chart, my partner Shane and I have been trying to get people to use less. You'll notice that even though this is a monthly, I didn't squeeze it all in. I like under, 100 or under on your page. Anything more than that, and you're looking at things that the market doesn't have memory for. I'm gonna say Kim. I hope I don't mispronounce your name. Lots of time, price changes direction before the major pivot point. What do you do so you do not miss the trade? Here's what you do. You don't worry about missing the trade. If you miss the trade, you miss the trade. Okay? If, for example, you're looking for a low, and it makes a low before the area that you've tactically decided should be the low, then and it makes a low and starts to head up. Then you decide, okay, maybe that's the bottom. Then you look for the reaction low and see if there's an opportunity there. And that's what Amos would suggest to you, and I certainly would not question Amos. Amos, if you want to know, Amos is the best trader I've ever seen, and I've studied traders from the last 300 years. I've never seen a longer-term trader. I can't study myself, but I've never seen a better longer-term trader than Amos Hofstadter. No, I'm not going to talk about the horn of plenty, and it really doesn't have anything to do with the frequency or line of maximum excursion. In fact, the horn of plenty, Dr. Andrews, when I asked him about it, he got a bit of a giggle out of it. He put it together because everybody else had, for example, Gann had hand fans, and there were several other people that had those types of tools. He put it together because, frankly, other people had similar tools, and he wanted something to look interesting. It's just every 10 degrees it has a down-sloping line. Every 10 degrees it has an up-sloping line. The two go together. And what I said to him is, how do you know where they intersect, which one to trade? It'll hit one of them, and he actually started laughing and said, well, that's true. So I would pass on the Andrews horn of plenty if I were you. Combine median lines with standard pivot points in different time frames in my analysis is a good approach. No, I don't think it is, but okay. Plus the logical distribution accumulation zones to plan my trades? No. Yeah, it's a question, Arturo, so no, I would say no. Do not use multiple time frames, period. Pick whatever time frame you're going to trade in that time frame. Don't look at other time frames at all. For logical distribution accumulation zones, that's market profile. I actually was the guy that funded market profile. It now belongs to the Board of Trade. It's an interesting idea. It has its use. It's easy to identify trends and or ranges and areas where price is likely to come back. But if you practice, you'll see that on a regular chart as well. If you want to put that together with median lines, I have somebody I'm mentoring right now. He's a professional trader that uses market profile. That's fine. But definitely don't use multiple time frames. Do you use any technical indicator oscillator for additional clues? Nope. Wouldn't touch it. Thanks for your willingness to share. This is from Tom. Hi, how are you? This is my first live webinar, but I've been working through your past IBs. Okay, good. I hope you're catching up. If not, you can get them here, and there's some older ones on the website. Your articles on the website don't show images. Is there something wrong? Please send me an email, Kushal. Actually, go to medianline.com if they're currently not. Send me an email anyway so that we can double check, because we recently put up a new website. Something's obviously wrong with the link, but send me an email. But also, if you go to medianline.com, you can see the same articles in regular format and PDF, and they have not been redone, so they definitely do show. My son did start 5th grade this week in Phoenix. Wow. Yeah, you should ask his school if they know anything about its stock market trading. And I want to say, I'm going to get this wrong, but I want to say it's Bright Start. I could be wrong, but it's stock market. Now, he wouldn't. The classes don't start until October, so he wouldn't even be asked about this. But he needs to be. I want to say this all started with Sean. Sean's teachers asked me to get involved, and he was in advanced classes. So, but ask a school if they have advanced programs and if they do any stock market work. Earlier question was probably unstated clearly. All right, this is William. Hi, how are you? The question was, after the second major pivot, price seems to make 4 drives to a new top. That is, even with the lowest high of the previous 3 drives to a top. Am I seeing this correctly? I like the info you gave on the double top not really being relevant, but my question was about a different time frame. No, you don't mean different time frame, but after the second major pivot, which was a low, I wondered if the following price rise, which did not have any drives to a top label, was really a 4th drive to a top sequence. Well, again, you know, you're cutting this too fine. I'll go back for you, but you're never going to. I know people want black and white answers, and I get that, but you're never going to get anything other than art. This is art. These 1, 2, 3s, and I didn't mark the bottoms, but this is art. This is the art part of trading, and it's the reason why my son and I talked about this last night in a completely different context. But computers are not going to take over the world. Computers are not going to write great novels. Computers are not going to write great concertos, and I will be able to out-trade any computer alive for the rest of my life, and so will you once you learn how to trade, because the creativity and the artistic nature that is relevant, computers, it just doesn't work. So I don't understand your question, but that's okay. If you have to have an answer, do me a favor. When you get your charts, when you leave today, mark it up and say, okay, is this a 4th and does this mean this? And send it to me. It's timothymorch@gmail.com or timothymorch@marketgeometry.com. Either one will work, and I'll be glad to answer you. Can this method be coded into programs? Oh my God, such as Ameribroker. Here, well, it can draw median lines for you. And in fact, I own the majority of a company that I am trying to sell to the rest of the owners, not because I don't believe in it, but because I don't want to be a software owner, called, you can look it up, you can just Google Market Geometrics, and they have a new version now for eSignal, and I'm sure they're going to be moving to other ones, but and I don't make any money off of it, but it'll draw median lines for you, but you have to do the trading, you have to make the decisions. And in terms of coding it into a program so that it gives you the red dot when it's time to sell and a green dot when it's time to buy, I've told this before. The first time I was involved in a program, it was Citibank, and we told them in advance that computers would not be able to do it because of the art. You have to choose pivots, you have to make decisions, and the art part is very costly. And after $25 million loss, Citibank threw the computer out the window. The next time I was asked, there was myself and 2 other traders, and we told them, you're chasing the Holy Grail. It's not going to happen. It was Goldman Sachs. They spent $250 million before they pulled the plug. So in terms of coding the actual methodology, there's no point. So I'm sorry. But you can get it to pick lines automatically, but will they be the right lines? You're going to have to make that decision. Johnny says, I'm a grown-up fifth grader loving this. Yes, you are, Johnny. Let's see. Bob C. Hi, how are you? I've seen many times where a maximum excursion line becomes a great future median line. Sure. In the early example, was there any thinking that price might pause, stop, reverse when price dropped from your entry right to the maximum excursion line? Looks like January 81. I guarantee there was not, but we can look at it. Well, I'll find it. There we go. So in the other example, was there anything that price might pause, stop, reverse, price drop from your right entry to the maximum excursion line? Oh, okay. I keep trying to slide it like it's going to go. So let's see. So you want to know as we got to the maximum excursion line, then it might pause, stop, reverse when price dropped from your entry right to the maximum excursion line. Well, I absolutely watch price as it gets to that maximum excursion line. I'm going to watch it when it gets to this shelf right here. But this is my first problem, and I talked about that. And the question is it going to stop and reverse here? And the reason why that's so important is I need to know that I'm at least 2 to 1 so that I can go to break even somewhere in here. Okay, and you can see 2 to 1 didn't happen until we made this one long range bar that went right to the maximum excursion line. So yeah, I'm always considering this area, this next major low, the median line, this major low, and I'm watching and seeing what price does in that area. And that's why I box in profits. It will always, at some point, it will always back up on you unless you have a logical profit target. Do I always put in action-reaction lines when drawing median lines? No, I don't. This one, I get a lot of questions about action-reaction lines. I don't show them very often. This one just happened to play well with action-reaction lines. It was actually a maximum excursion line that became an action-reaction line. Hi, Ed, how are you? Do you have rules, and somebody I know, to define a pivot as it is potentially forming? For example, higher high than previous bar, and as soon as the bar following has a lower high, do you now have a pivot? I think you can say this. When you have a higher high than the previous bar, and as soon as the bar following that has a lower high, you now have a pivot. You can then start to draw, and then you can play what if. You're not ready to trade, but you can start to think tactically. So go ahead and draw. You know, let's say you're going to use it for a C pivot. Go ahead and put that median line in. Maybe you're not ready to draw yet, but you can start to think tactically and say, if this is the high, then what do I need to see to feel comfortable? What do I need to see to make me feel comfortable that the C's in? Where would I want to get short? If I'm looking for the reaction short area to get short, where would that form, and why would I want to do it? Hi, Don. How are you? Good to see you. Steve says, also, a quick thing to say, wish you would do this webinar more than just once a month. Oh, my God. You know, I wouldn't give up doing this with Cynthia for the world. But as Cynthia knows, it takes a lot of work. It takes a lot of work for her just to corral me and get it all in and get, you know, I mean, I wish I could, but you got to remember, I manage hundreds of billions of dollars as well as teach fifth graders and also teach at market geometry and universities. So that's the best I can do. And the only place I do teach traders is here. Let's see. Stocks, Eric says, when trading stocks, what about watching comparables to see how the group or comparable trades in the same periodicity, of course? Well, you can do that. The problem is you never know what the lead or the lag is. I think everything's in price. I just look at individual stocks. And in Eating with the Master, we have mostly stock positions, so we do a lot of stocks. Can you repeat which are leading indicators? Sure. Median lines, lines of maximum excursion, these advanced multi-pivot lines, prior highs. It gets pretty skinny after that. Prior highs, prior lows. Can you make your previous CBOT webinars from 205, 207 available somewhere on the net? Yes, we're putting them up at Market Geometry. Should be up shortly. In fact, they go to 203. Well, the Chicago Board of Trade webinars, which was Barbara and I, go from 2003 to 2005. And then, of course, Cynthia decided that she would sponsor them. Do I use Fibonacci? I know it intimately. Joe DiNapoli is one of my closest friends, and he's about as good a fib trader as there is in the world. I sometimes put them on my chart. Mostly I want to know where the 3A2 boys and girls and the 618 boys and girls are playing, because when they get busted, I know it's going to drive me to profitability. Or the pause there while they play, for example, might be an area for me to get in. Pivot counts were in the webinar on gold. There you go, Charles says. 11, 12, 15, how to trade gold futures. Thank you. So if you want to see pivot counts, go back to the webinar on gold. Thank you very much, Charles. I appreciate finding that out. Frankie says, and always thank you. Is it true that multi-charts does not allow you to use a modified shift? I don't know the answer, but I will say this. If you double check that and that's true, and if you drop me an email, I will give them a call. I know them, and I will help them modify the code. It's very simple. Ahmed said, I used to think shorter time frames are more risky. I do not think so anymore. Am I right? Shorter times are more risky. I think you should have equivalent risk across everything you trade, so I think you are correct. Okay? I don't think they're less risky. How about that? Most people think that shorter time frames are less risky than longer time frames. I would say, if anything, trading in time frames like this, it looks like it's really expensive. However, there's so few pivots, you know a lot more about what's going on. I'll do a few more, Cynthia. I know you probably need to wrap things up. Okay, so I see. Michael, you were answering Brian. Okay. Computers are morons and lack the ability to perceive. Okay. Neil says, it's truly a great treat to watch and listen to your presentations. I consider it sitting at the feet of the master. Thank you. And that was the reason that we did Breakfast with the Masters. It's Amos, Dr. Amos Hofstadter, Dr. Andrews, and then, of course, my methodology all put together. Same thing with Evening with the Masters. It's not just me. It's the people that, you know, I stand on their shoulders, so to speak. Steven says, not to refute anything you just said. However, there are a lot of machine learning algorithms out there that can do a pretty good job of doing regression techniques. Regression techniques, Steven, by their nature, are lagging. I'm sorry. They're not essentially median lines per se. They are linear regression lines. They lag. And they're also curve fit. I'm sorry. You'll have to go back and study the statistics of the two. It doesn't mean that they can't make money. It just means I can out-trade them. And most people that are profitable can out-trade computers. It's just the truth. Computers don't know when to stop. It says, please give a quick recap of the class you have. I think on the last IB seminar, you said one of them teaches long. Yeah, okay. Breakfast with the Masters is basically intraday trading, and we still use the methodology of Amos Hofstadter, Dr. Andrews, and myself, and we trade, I'd say we feature gold, soy meal, currencies, and bonds, and probably leaving something out, but in shorter time frames, sometimes tick, sometimes smaller time frame time. We don't use any volume charts. Evening with the Master, we use a longer-term methodology to build portfolios. We've taken $100,000. It's currently worth, off the top of my head, $134,000. And without adding any money, we've gone from the ability of, we can only risk 33% of that $100,000 at any one time. 3 positions, any one position cannot risk more than $8,000. You can now have a total of, some people are adding to their 5th position because of the profits that they've taken. For example, almost everybody's still long Facebook at $23 and change. I've just put people into the pound trade. They were in WUBA, which is 10 cents, Chinese thing. We're waiting for Alibaba to be coming out, which is going to be called 11 Main Street. A lot of people are long Nokia at $3 and change, which is up around $8 at the moment. So we trade longer term. Facebook is well over a year. So those are the two classes, and then we also do a midday session, which we call Market Maps, and in that that's the basis of our methodology. We teach foundation classes. On Monday, Shane did a wonderful thing on finding that third alternating pivot. But it might go that, or it might go all the way very advanced. I might be there doing something on the three-dimensional trading, looking at that third dimension, which we haven't done here yet, but we will. Multi-charts does not have a modified shift. Okay, I'll get a hold of them. Looks like a run is shorter, Cynthia. Let me grab this last one. And figuring risk-reward and going long, for example, how do you determine whether to measure to the median line or to the upper parallel? Well, you have to decide what's most likely. Okay, you want to look at your first problem. Where's my first problem area? And you want that area to be 3 to 1 or better, or it's going to be very difficult for you to mark to the market and then go to break even. So it doesn't mean you can't box in and continue to trade past the original idea. Fine with that. I do that all the time. But you know, you should think about it this way. What's my logical profit area? But where's my first problem? Do your original, it's called perceived risk reward, at your first problem. If it gets past your first problem, that's a good thing. Then you can start to box in. OIC, always good to see you, and I'm sure Shane and Wendy will give you a big hug as well as Sean and Lucy. Cynthia, I'll bet you'd like some lunch.
Well, you have given us quite a bit of information here today to go back and digest. So besides lunch, there's a lot of trading knowledge. So, Tim, thank you very much for today's presentation. And I want to remind everyone, as well as Tim, that we have another webinar scheduled for September 11th. So I'll be pestering you shortly for that information. But
okay, I better start thinking.
So put that cap on, and I'll get back to you later on. But that is going to conclude our webinar here today. So thank you, everyone, for sticking with us this long. It actually is wonderful knowledge. Now, by the way, I want to remind you that today's slides and the recording, well, the slides will pop up as you exit today's session, and the recording will be out within the next hour or so. So watch your inbox if you want to see or come back and review any of the concepts that Tim went over here today. Well, with that, we're going to conclude our event, and I want to thank both Tim and the CME for making today's event possible. It's their dedication to training traders that makes these events possible and quite popular as well. So thanks, everyone, and a special thanks to Tim Morch for getting all of this information out in a timely fashion. So thank you, Tim. And thanks to Pete Mulmat, too, with the CME. So that's going to conclude our event. Now you can all exit today's session using the X in the upper right-hand corner of your screen. Thanks, everyone. Have a great afternoon. And please remember, definitely trade smart. Thanks, everybody.
Thanks, Cynthia. Thanks, everybody. You all take care.